Good morning, everybody. Hey, welcome to this Wednesday, the 21st of August. Hope you're doing well today. Yesterday looked like it was not a bad day, but we'll talk about that and more when Dave joins us here in just a few seconds. We got some earnings to talk about and more. Before we do that, though, let's not forget that in this world we live in, there are so many things that are out of our control. We need to make sure that we take control of our portfolio by knowing the amount of risk we have in our portfolio versus the amount of risk we should based on our current circumstances. Give me a call at 863-382-0037 to schedule your core retirement analysis. With that, we've got Dave coming up next.
17 before 9 at 105.7 Light FM. Good morning and hello. I'm so glad you're with us this morning. Also glad we got Phillip Statler back in the saddle with us to look at Fall Street and see what's going on in the markets this morning. Phillip, good morning. How are you today?
Hey, good morning, Dave. I'm doing well today. I hope you are too. And, maybe now that we've gotten through some of this political stuff, at least part of it, we still got more to go, obviously. Maybe we can focus more on what's happening financially in this country.
That could very well, but my hunch is the political stuff is nowhere near done. Donald Trump did an interview with a reporter yesterday. He said, heck yeah, I think it's perfectly fine to have presidential candidates jaw-boning interest rates and talking about it. So he pretty much fired the volley that if the Federal Reserve does what we all expected to do in September and reduce rates by a quarter or heaven forbid, from Trump's standpoint, 0.5%, you can expect a lot of flannel mouthing on both sides of the political spectrum. Is that going to surprise you any?
That won't surprise me at all. I will tell you that's the one thing I disagree on all political fronts is that the executive branch should have nothing to do with the Federal Open Market Committee. That would be disastrous, to say the least.
Yeah, this is not a political entity. If there's one thing that the entire mechanics, and I've had the pet theory for a long time that really the only reason we've managed to survive the spending that we do on the congressional side is the fact that ain't nobody can do anything about the Fed. So the Congress keeps spending money and keep priming the pump, using Keynesian economic terms, spending money like drunken sailors. If we didn't have a bunch of hard-nosed bankers that clamped down on the money supply before things got out of control, I got a hunch our economy would look more like Bolivia than anything.
Yeah, it would not be a good. It would not be a good sign at all.
Absolutely. We may not like the medicine they give us sometimes, but sometimes it's necessary if we're going to continue to spend money. Speaking of medicine, the market took a little bit of medicine yesterday, and I don't think it was anything earth-shaking. Neither you nor I could find anything that really was enough to scare anybody. But basically, our 8-day winning streak kind of came to a halt. Dow was down by 61 points. Standard & Poor's was down by 11. And NASDAQ was down by about 60 points. We're talking about between 0.15 and 0.33%. I got a sneaking hunch that was just a little bit of running out of steam and a little bit of profit taking, because there really wasn't any news that would have affected it that direction.
No, there wasn't. And I think if I remember right, we were probably on a 6 to 8 day upward swing for the most part. And so it was maybe time for some people to rebalance and take some money off the table in certain stocks and replace them with some others.
Absolutely. It was an 8-day winning streak on the Standard & Poor's. So, point well taken. I mean, you want every investment advisor, I'm assuming you do the same with your clients, when things hit a peak, you say, okay, let's rebalance and find different, find the investments that make sense for the current market conditions. And these guys with their hedge funds that move billions of dollars in a day, they do it on a day-by-day basis, whereas you may do it quarterly with your guys, right?
Yeah, they do it a lot more often than us regular people.
Offhand, I suspect so. Data dump this morning, not a lot of federal government information coming out. About the only thing that hit was the Mortgage Bankers Association Mortgage Index news. Now, mortgage rates did go down last week. I don't have the exact number, but applications themselves went down by quite a bit as well. I got to believe some of it is the notion that, okay, with all the refis that drove it last week, much as anything, people are expecting mortgage applications to go down farther, so we got a little bit of sitting on our hands syndrome going on to see what's going on as far as 30 days hence, whether or not the mortgage rates are going to be lower.
Well, yeah, when everybody's talking about lower interest rates, well, if you're thinking about refinancing, you're going to hold on another 30 days to determine if that's going to help you out or not. And that's probably smart thinking as far as that goes.
Kind of struck me as being that way, so I can't say I was overly shocked by what otherwise would be relatively bad news this morning to see the mortgage market still on its knees. Interesting, we're going to get a report about 10 o'clock this morning, a job picture revealing the U.S. economy's total job ads over a one-year period ending in March. And they're saying that the U.S. economy could add 1 million fewer jobs than they were originally estimating. Boy, we're revising things all the way back, aren't we?
We are, and Dave, that's one of the things that I'm seeing across the board. That's and a reason why the markets are ticking up today. That and the hope of a half a point cut in interest rates in next month. So between those two, and I don't know that I've ever really seen this report before, but it's called the BLS payroll revision.
Mm-hmm.
So I guess that comes out about 10 o'clock, like you said.
Yeah, it's relatively new to me too. I've seen it or heard of it, but it's something that never really attracts the attention of the media press. But the Bureau of Labor Statistics does a full year summary once a year, I gather, and they do an April to March run, basically correct all the numbers they give us with all darn year, and say, oh, we were wrong. It was better or it was worse. Well, in this case, they're going to say, darn, it was worse than we told you it was. But that does tend to confirm that the employment market is slowing down the way the Fed wants to. So it's one of those bad news, good news situations, especially since March is solidly in our rear view mirror and it doesn't indicate what the economy is doing today. Americans are looking for work more than they were. New York Fed report says we're changing jobs and looking for new jobs more than we have for 10 long years.
Man, I
found that kind of
that's a long
interesting.
Time.
Dovetails off a report I had last week that says job changers generally make much better raises than people who stay at their job and count on their boss to give them a raise. That comes under the Mr. Obvious, doesn't it?
Yeah, it does, and so it'll be interesting to see how that really shakes out as less and less jobs are available.
Absolutely. You got a bunch of reports out this morning. A few of them actually have companies that we've actually heard of as we kind of wind down to the end of earnings season. Target's always interesting because they're one of those companies that I've seen kind of sandwiched between the Walmarts of the world and the Walmarts of the world and the Macy's of the world. How did Target end up doing last quarter?
Hey, Target did well, Dave. They beat pretty well. They came in at $2.57 versus $2.18 expected. They beat by almost $1/3 billion in revenue as well. The one thing about Target is they did come out and they gave a cautious outlook for the full year, thinking, hey, look, this we may not continue at this speed or this rate for the rest of the year based on economic conditions. Not hurting Target this morning, though, like it hurts a lot of companies. They're actually up 16.33%. Right now, they're trading at like $166.
Wow. I mean, normally conservative guidance, that's like taking a poison pill.
Yeah, exactly. Never a good sign. Hey, but let's keep on with retail. We got Macy's also reported, and Macy's they beat as well, at least on earnings. They came in at 53 cents, and that was 23 cents ahead of expectations. They did miss on revenue by just a little bit. Maybe 200 million or so. So, but they did miss on revenue. They are trading down almost 9.5% this morning.
Kind of get the feeling that revenue is more important right now than profit margins. They want us to sell more instead of just make more money out of less sales.
Well, and just like Target, they gave some cautious. Actually, they went as far as cut their full year sales forecast. So that's probably the biggest thing that's weighing down them.
Well, that doesn't help. 2 out of 3 bad sides of it. That'll kill you every time.
Yep. So then we had the home builder, Toll Brothers, came out, and they did better than expected as well, substantially. I almost say they came in at 360 versus 271. a pretty big jump for them. So
Hmm.
nice deal there. They beat on revenue as well. They're trading up about 1.1%.
All righty. Well, that's a major sector to do well in, too. Resetting the table, it was a slight off day yesterday, a little bit of readjustment and profit taking place. 45 minutes before we open this morning, Philip, what are we looking at so far on the futures?
They've got some green ink, not a lot, but it's better than red ink, right? So we've got the Dow Jones Industrial 30 up $67. That's dead right between a tenth and 0.2%. The S&P 500 is up 0.2. That's $11. The Nasdaq 100 is up 0.2 as well. That's $41. Big winner right now is the Russell 2000, up 0.6% or $13. So everything's in the green now. Whether we can stay that way at the open will be a big question. On the other side of the coin, we got silver trading up about 0.5%, trying to get back over 30. It's at $29.64 an ounce. Gold's actually trading down a tenth. And then crude oil up 0.4 to $73.47 a barrel right now.
Yeah, but below the 74 number I've had for the couple of days now, so I'm happy with that. I can tell you why. I filled up with gas on Sunday. That explains why oil goes down on Monday. It happens every darned time. Overseas markets, by and large, unless you were dependent on China, it wasn't a bad day in the Asian Rim. 6 a.m. The Asian Rim markets mostly up, except for the mainland Chinese indexes. Investors there are not happy with the Chinese central bank's decision to hold the line on interest rates with no reduction, so they're trading downward this morning. The rest of the Rim generally kind of sort of up. Over at the European community, they're following our futures and saying, oh, okay, things are all right. Overall indexes in the European theater in the 1/3% positive range this morning, halfway through their trading day. Somebody needs to get a little bit of advice to make sure retirement actually happens on schedule and in the manner you planned on it happening. How do I get a hold of you to make that happen in my case, Philip?
Yeah, that's why I developed the core retirement design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And you and me together again tomorrow morning about the same time. I'll see you then, Philip.
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Do you actually...
Folks, again, I want to thank you for joining us today. Take care. I look forward to talking to you again tomorrow. Bye now.